how to trade the inverted head and shoulder chart pattern like a pro. How to trade the inverted head and shoulder chart pattern like a pro. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW24 traders, and our website is www.stochastic-MACD.com. The title of the video is how to trade the inverted head and shoulder chart pattern like a pro. In this tutorial, I want to clarify once and for all the trading mistake relating to the inverted head and shoulder chart pattern and help traders, to improve, how they trade the inverted head and shoulder chart pattern, How do the pro trade the inverted head and shoulder chart pattern, all right? So the first thing that we want to know is where and when does the pattern form? Whenever we are dealing with a chart pattern, any type of chart pattern, we want to know where is this chart pattern usually formed, Very, very important for us, Very, very important. Because if we see the pattern at the wrong place, we will now question that chart pattern, All right? The inverted head and shoulder chart pattern, first of all, is a bullish chart pattern. So, a double bottom chart pattern is a bullish chart pattern. A round bottom chart pattern is a bullish chart pattern. In an inverted head and shoulder chart pattern is a bullish chart pattern, So, the first place that we are likely to see, a bullish chart pattern is at a support level. So, the inverted head and shoulder chart pattern, we will very often see it at a support level. The support level can be a Fibonacci retracement level, all right? So if we see an inverted head and shoulder chart pattern at a 50% Fibonacci retracement level, we will be quite happy to use a top-down trading method to trade it, Where we see, price pull back to a support level, and we see the price form an inverted head and shoulder chart pattern, we will be happy, to use a top-down trading method to trade it, because the inverted head and shoulder chart pattern is a trading setup, is not a trading signal. Now, unless you are using, a fractal signal, all right? So what I say to TSTW24 traders, we can see, a double green on the daily charts. Now we switch to the, first best time frame, and we can again take a double green signal, All right, these are what we call fractal signal. When we use the signal as a trading setup on a higher time frame, and then enter the trade on a lower time frame. So when we see an inverted head and shoulder chart pattern, for instance, on the 2-hour chart, and then we go, for instance, on the 5-minute time frame, and we see again an inverted head and shoulder chart pattern, we can take the trade, In that case, on the 5-minute time frame, we are using the inverted head and shoulder chart pattern as a signal and also as an entry, We can do that. But generally, the inverted head and shoulder chart pattern is a trading setup on a higher time frame, and then we use a top-down trading method to trade it. The point I'm trying to clarify here is that we want to know where and when the pattern is being formed, because if the pattern is at the wrong place, our trading setup becomes useless. So the first place where we usually see the inverted head and shoulder chart pattern is at a support level. First point. Now, the ultimate place, the ultimate place that you don't want to forget, where the inverted head and shoulder chart pattern is formed, is at the end of a downtrend. Beautiful. Now, this is my favorite bullish trade setup, It's gorgeous, all right? At the end of a downtrend, So I have my drawing here. Price going down, price in a declining channel. That's how we know it's going down, yes or no? So everybody say the price going down, price going down. So how do we check the intensity of a bearish progression? We check the intensity or the validity of a bullish progression by checking the low. Did the asset form a new lower low? All right? So if the bearish momentum is strong, it's still solid, and the price must continue, not may, must continue to display a new lower low. So anytime the price forms a low, we can put a line there and say, okay, this is a low in a downtrend, in a declining channel. Will it form another low below that low? If it did, then we say that, okay, that bullish momentum is continuing. So if it forms a new lower low and then it rally up to the edge of the declining channel, we look for opportunity to sell on the edge of the channel and bring it down to form a new lower low. But remember what I'm saying to you, the ultimate place for the inverted head and shoulder pattern is at the end of a downtrend. So at the end of the downtrend, we'll see like this, price form a low. So we say, okay, it's a downtrend. We must see a new lower low, price rally up, maybe even come, you will see it will come out of the channel. So bearish channel, you see the price will come out of the channel sometime like this. People say, whoa, it's out of the channel. But instead of forming a higher low, because if the price is out of the bearish channel, it's indicating to us that the bearish momentum is diminishing because it shouldn't be out of the channel. Now it escaped for a while, but now we are watching it. You say, oh, the bearish momentum is diminishing. Now, to the surprise of everybody, the price goes down and forms a new lower low. So we say, game on. The bearish momentum is not yet finished. Okay? So if it's not yet finished, if the bearish momentum is not yet finished, we must have another low that is lower than this one here. But what usually happens at the end of a downtrend, when we see an inverted head and shoulder pattern, the price will do similar thing, and it come out of the channel and then form a new lower low to the surprise of everybody. But as it rally up, people try to sell it, the price will fail to form a new lower low, indicating to us that that bearish momentum is evaporating, is no more solid. So the second place where we see the inverted head and shoulder chart pattern is at the end of a downtrend. All right, like this. Okay, so price form a low, but now fail to form a new lower low below this low. Generally, we will see equal low here. The low before the last low is what? It's a psychological price level. There is a video at George Rio channel about psychological price level. The low before the last low is a psychological price level. So that's why we are watching it from a new lower low. But now as you go up, try to come down to form a new lower low. It forms equal low with the prior low, which is a psychological price level. Here it is. Okay. So the second place where we see, okay, the inverted head and shoulder chart pattern, or the ultimate place where the inverted head and shoulder pattern is often formed, is at the end of a downtrend. That's the best place. That's the ultimate place for the inverted head and shoulder chart pattern. It's a bullish chart pattern that is indicating at the end of a downtrend a possible reversal. We must now use a top-down trading method to trade it, okay? And in this tutorial, I will also show you how do the pro trade the inverted head and shoulder chart pattern. But before that, we want to know where and when, okay, does this pattern form. It's formed, first place, support level, second place, or at the end of a downtrend, third place, which I'm telling you now, in a downtrend. So we may, sorry, my apology to traders, we will also see the inverted correction, the third place correction. The third place for the inverted head and shoulder chart pattern is also in an uptrend. So price is rising because why can we see an inverted head and shoulder chart pattern in an uptrend? Because it's a bullish chart pattern. Bullish chart pattern can be formed in a rising channel because it's a bullish progression. It's normal that we may see some bullish chart pattern as the price is going up. Okay, yes or no? All right. But don't fall into the trap. Whenever you see an inverted head and shoulder chart pattern, which is a bullish chart pattern, it is conditional that you use what? A top-down trading method. Otherwise, you are trading like the old-fashioned way. That's what we were taught years ago. Double top, okay, equal sell. No, double top equal bearish trading setup, okay? Inverted head and shoulder chart pattern equal buy. No more. That's not true. an inverted head and shoulder chart pattern equal, look for, use the top-down trading method if you see it on a higher time frame, unless you are using it on the entry time frame. That's a different matter. You are using the pattern on the entry time frame, that's a different matter. If you are using it as a trading setup, it's not that the signal, okay? So the third place where we can see the inverted head and shoulder pattern is in a rising channel, okay? All right? Or the price may pause. So there is one example here. You see here. Look at this price. We are looking at Bed and Bath and Beyond Incorporation. Bed and Bath and Beyond Incorporation. Epic Bravo 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 Yankee. BBBY. Bed and Bath. Bed, Bath, and Beyond Incorporation, okay? This is listed on the NASDAQ 100, okay? So here we have a bullish progression, all right? So this is not a downtrend, yes or no? You agree with me? This is not a downtrend, isn't it, okay? Because we say the ultimate place for the inverted head and shoulder chart pattern is at the end of a downtrend. But here we have an uptrend, and now we have what? An inverted head and shoulder chart pattern. You see here? Are you with me? Can you see it? Came down from a low, all right? And then pull up, okay? Are you with me? All right? And then it came back down from another low. So this low here is what? A psychological price level. Why? Because it's the low before the last low. Now price rally up. Okay, so price from a lower low, so this is what I'm talking about. So from a lower low, now it's out of the channel, this bearish channel here. Are you with me? This bearish channel, this channel, okay? You see bearish trend line here. The price was below that bearish trend. Now the price breaks above the trend line after forming a lower low. So we will say, well, it's escaping, okay, the bearish progression. Okay, now it pulled back. It couldn't form a new lower low after a rally. So the price formed a lower low, rally up. If the bearish momentum is strong, it should go back down below this low here. But to this, here it is. It formed, okay, equal low with the psychological price level. Now this inverted head and shoulder chart pattern is a continuation pattern. It's a continuation chart pattern because it's not taking place at the end of a downtrend. There was instead an uptrend, and somewhere between here, this is a correction taking place, and the price formed an inverted head and shoulder pattern. This is a continuation pattern. All right? So it's a bullish progression, okay, that was, okay, posing with an inverted head and shoulder pattern, signaling to the bulls that the bullish momentum is not yet finished. So normally, if a bullish momentum is about to be, the bullish momentum is about to stop, we may see a bearish chart pattern, okay, double top, triple top, head and shoulder chart pattern will end, okay, will signal the end of an uptrend. But here we have a bullish progression. It's been ended by a bullish chart pattern. It's a continuation pattern. Here it is. Okay, so the third place is during a bullish progression, we may see the inverted head and shoulder pattern. You may see directly in a rising channel, or the price may go up as it did here and then form a bullish chart pattern, signaling to us that, okay, the bullish momentum is not yet finished. In all cases, this is what I'm trying to clarify with traders. We will not just buy and hope. We will use a top-down trading method. Okay? All right. There is another place where we can see the inverted head and shoulder chart pattern. We can see the inverted head and shoulder chart pattern, okay, at a price target level. What do I mean by that? Okay? So, We know now that if you are trading a double top, okay, we measure the depth of the double top because we recorded a video already about how to trade a double top like a professional trader, all right? So we have a double top, okay, we set a target below the neckline by measuring, okay, the depth of the double top. We set a target, okay, greedy target all the way here. There is a high chance that when the price reaches the ultimate target, that we may also see a bullish chart pattern at the price target level. So we may see the inverted head and shoulder chart pattern at the conversion point where professionals are setting target. If you do not know about conversion trading signal, go to www.stochastic-MACD.com. So at the price target level, we are at a bearish price target level. So bearish traders set a target. If those bearish traders will take profit, they will have to buy. At a bearish price target, we are likely to see, okay, a bullish chart pattern, okay? And we may see the inverted head and shoulder chart pattern at the price target level. One example is we set a target for a double top. Prior reach is the ultimate target. We may see, not always, we may see a bullish chart pattern and ultimately the inverted head and shoulder chart pattern. But the ultimate place for the inverted head and shoulder chart pattern is at the end of a downtrend. This is, if you forget everything else, remember that the best place for the inverted head and shoulder chart pattern is at the end of a downtrend. So, all right, it's a bullish chart pattern. It will be formed at the support level, best place, support level, key level, all right, end of a downtrend, during a bullish progression in a rising channel or bullish trend, okay, posing for a while with a bullish chart pattern. Another place is at a target price level, a bearish price target level. So the bearish traders are selling, price going down, price looking for a better support level. So the bearish target level is a support level. A bullish price target level is a resistance level, because if the price going up, the price looking for a better resistance level. So a bullish price target level generally will correspond with a resistance level. A bearish price target level will correspond with a support level. So we are likely to see a bullish chart pattern being formed at a price target level. Ultimately, we may see the inverted head and shoulder chart pattern being formed at a price target level. So we clarify now, which is so important because we want to know where and when, okay, this pattern is being formed. Next step, how do the pro trade, okay, the inverted head and shoulder chart pattern? I'm going to move very fast now. Professional will trade the inverted head and shoulder pattern by measuring the depth of the inverted head and shoulder pattern from the last low to the neckline. So here it is, we have an inverted head and shoulder chart pattern, okay? Professional, so you see this low here, all right? The neckline is the end of this rally. So you see we are looking at three low, a lower low, and an equal low, all right? So this low here, the left-hand side shoulder, all right? This is the left-hand side shoulder. This is the right-hand side shoulder of the inverted head and shoulder chart pattern, okay? Where the rally has ended, that's what we call the neckline, okay? That's why I draw my orange line here. So the professional day trader, swing trader, position trader will set a target by measuring the depth of the inverted head and shoulder chart pattern, okay? From the head to the neckline, okay? The neckline is this one here, the orange line, which is where the rally here has ended. The left-hand side rally has ended, okay? Okay, we measure it. You will always notice that I use a conservative measurement. I do not go all the way to the tail, but some traders do, and you want to be aware of it. So when you are drawing it in a conservative way, the target measuring the depth, as I'm doing here, be aware that some trader will push it all the way down here. So you want to know what are they looking at, because I like to close my trade before everybody else. Okay, so I will use the conservative measurement like this, all right? Here it is, okay? And then when the price breaks above the neckline, the professional will set a target here. So here it is, this is the neckline of this inverted head and shoulder pattern, which is in this case a continuation pattern because it's not taking place at the end of a downtrend, but it's a continuation pattern, a bullish progression from an inverted head and shoulder chart pattern. It's a continuation pattern. We want the price to break, so after we draw our neckline, where can we enter the trade? We want it to break above the neckline and to retest it. Can you see here? How you retest it here? We are on the monthly chart. Here it is, you see the tail of this candle. Everybody wanted to retest it. Professional, hedge fund, banks want to retest because it breaks above it. Now, as the price goes up like this, they place orders here to buy. And these orders, these buy orders, will attract the price. They don't want to buy here. They want to buy near the neckline. So they will place order here to buy. What we do as a traders, price pull back to retest the neckline after breaking above it. Okay. We place a vertical line there. Okay. And then we implement a top-down trading method. Now, because we're on a monthly chart, we'll say monthly chart, daily chart, hourly chart. Okay. If you see this on a daily chart, we say daily chart, hourly chart, 10-minute time frame. On a weekly chart, 4-hour chart, 50-minute time frame. Of weekly chart, 2-hour chart, 10-minute time frame. Okay, we can do that. Multiple time frame trading method. We allow her to control the trade and to manage the trade and enter the trade like a pro at the best place. Okay, here it is. So this is it. Break above the neckline. Now we measure, you remember how we set the target? We will measure, okay, the depth of our inverted head and shoulder chart pattern and project it to the neckline. You see this sometime on the 5-minute time frame. How the professional will push the price very fast, high frequency trader will push the price very fast to the target level. All right? So here on the monthly chart, professionals that have noticed this inverted head and shoulder pattern, which is a continuation pattern in this case, we set the target here. You see, price went a little bit above it. This is a target zone, which is a conversion point. So what did I say to you? Okay, a bullish target level correspond to what? A resistance level, okay? Now, based on the market stable data, okay, where do we see bearish chart pattern? Bearish chart pattern are often formed on or near a resistance level. Bullish chart pattern are often formed on or near a support level. Yes or no? Okay. So here, this is a target level for the bull, which is corresponding to what? A resistance zone. What do we see here? A bearish chart pattern on the monthly chart. I will be happy to take this one. This is a conversion, okay, signal, okay, trading setup for the swing traders. I don't need anybody else's permission here. This is a triple top at a convergence zone. Okay, the target is in that zone. Remember what I said to you. We can go into the mind of other traders because I use a conservative measurement. All right. We push it down like this. This is a greedy target, and we set it up. You see, it's a little bit above my normal target, bringing it up here. All right. So we can use the top-down trading method when we see all this bearish chart pattern being formed in a resistance zone. We'll be happy to join them and trade it like a pro. If the signal fell, we just come out. All right, just come out. Don't blink. Just come out. Okay. Another thing I need to mention about how to trade the inverted head and shoulder chart pattern like a pro before I wrap it up. Okay, is that sometimes you may not see. Okay. The left-hand side shoulder and the right-hand side shoulder being equal. What do I mean by that? You can see here that in my drawing, this is the left-hand side shoulder and this is the right-hand side shoulder. This is the head here. But in this drawing, you can see that we have the left-hand side shoulder and the right-hand side shoulder being equal at the same price level. Sometimes that's not the case. Again, here, if you look on the chart here, this is the left-hand side shoulder, this is the right-hand side shoulder. They are almost equal. But when traders are learning chart pattern, they think that it's always like this. And sometimes they miss some good opportunity. I have, okay, one example here, which with my drawing, you may see the price may do something like this. It goes down like this, okay? So then we have the low, price coming down. Are you with me? Price coming down from this low, okay? So probably we have just a small rally like this, And here it is, and then it come back down, forming, okay, the head here. Okay, now It goes up to this point, okay, all right, okay, or it goes up like this, okay, it goes up a little bit above this level, and then, okay, and then pull back to form this low, okay. That's the best at drawing. If you accept that, trying to draw things. All right, you like my drawing. Okay, let's move on. 1 second, please, traders. Try to remove this line. Okay, I have a better drawing, so I put my neckline like this, okay? Get in there, okay? Get in there. Okay, now. Okay, the point I want to make, that's what traders call slanted inverted head and shoulder, where we do not have the left-hand side shoulder being equal to the, okay, right-hand side shoulder. So you see, this is the left-hand side shoulder, is here. But look where is the right-hand side shoulder, is here, below it. But this is an inverted head and shoulder that is not straight, that is not horizontal. So price from a low, rally up, pull back, display low. Now rally up, pull back from this low. Now it come out here. The neckline is this one here. You can see that this one is not straight. The point I want to make is that a lot of traders are not aware of this type of inverted head and shoulder pattern. But the same rule applies whenever we see this or horizontal inverted head and shoulder chart pattern. We must ascertain that it's taking place at the right place, at the right time. Where and when do we see the inverted head and shoulder chart pattern? So I have good news for you. Sometimes you may see it like this, and you may miss it, okay? So be aware. Remember that how we draw the neckline, the rally from the left-hand side shoulder, okay, where it ends, that's where we draw, okay, the neckline, okay? So this is it. Instead of having horizontal neckline like this, you have something like this, okay? So in this case, we will prefer the price. Okay, in this case, we prefer the price, okay? If you want to enter the trade, to break above the neckline, to retest it somewhere here, all right? And then, okay, boom. But very often with this okay, slanted, okay, inverted head and shoulder, professional will enter the trade here. Because what usually happens, they will enter here because it's quite hidden, and the price will just run out completely, running away. It may not stop to retest the neckline like this. So this is a better place, okay, when you see it like this, use a top-down trading method from this angle here to trade it. Or when you see it coming up, start changing direction here, join it at early stage, and but be aware of the neckline. The price may not pull back to retest the neckline. It will just run away. Okay, it makes sense? It is also powerful. So this is how the professional trade the inverted head and shoulder. There is something else that maybe you have never heard about. I've never seen many of YouTubers talking about it, okay? Another thing that the professional will do, so you see my measuring stick, this one, okay? They will subdivide it into two. So they will select the midpoint of the target. So we see here, price form a low, okay, and then from a lower low, okay, all right, it start pushing it, okay. So as you see now, it starts. So we have the left-hand side shoulder, we have the head, price start going up, okay, all right. But already with this rally here, the end of the rally for the left-hand side shoulder, we can draw the line there. You draw a line there, okay. So price going up like this, okay. We can draw this depth straight away before, okay, this low here, and then we subdivide it into two. This will allow us to also know where the right-hand side shoulder is likely to be formed, because generally it usually forms, this is very important, that the right-hand side shoulder of the inverted head and shoulder chart pattern generally, theoretically, is formed near the midpoint of the measuring stick of our inverted head and shoulder chart pattern. So here it is, you may be seeing, so this is the depth of this is our measuring stick. If the pattern is being formed, it's not yet completed, so we see it's going up like this, we can have a bit of idea where the right hand side shoulder is likely to be formed. Generally, we see it being formed most of the time, 90% of the time, it's formed near the median line or the midpoint of our measuring stick. This is our measuring stick from the head to the neckline. We divide it into two and we draw a line that is parallel to the neckline. So the neckline, you see, is like this. That's why the line that I'm drawing through the midpoint of the measuring stick should be also parallel to the neckline. The neckline, how do we draw it? From this low, where the rally has ended, draw a line like this, okay? Okay? Midpoint. That's where we are likely to see the right-hand side shoulder. Okay? So with this information, because this is quite hidden, because it's not straight, it's not horizontal, inverted head and shoulder pattern like this one, okay? So you see now this low, okay? You see now this low, try to form a new lower low, okay? So straight away you see rally end here, you can draw a line like this on the top, okay? Just like this, just draw it, okay? And then once the price starts changing direction here, going up like this, you can just draw a line like this and divide into two. And if you see finding the support here, wait until it turns around a bit, okay? And then use a top-down trading method to take it like a pro. It makes sense? It is also a powerful, okay? If you have any question, all right, put in the comment section. And in due course, I will record another video to answer your specific question, all right? To summarize this video, the inverted head and shoulder chart pattern is a bullish chart pattern. Now, next question. Where, okay, do bullish chart pattern form? Bullish chart pattern, the first place we see them, according to the market stable data, is a support level. So the inverted head and shoulder chart pattern can be formed at a support level, at a key level, okay? The ultimate place that we see the inverted head and shoulder chart pattern is at the end of a downtrend, as I show you here, okay? There is another place, which is the third place, is in a rising channel. Because it's a bullish chart pattern, we may see it, okay, in a bullish trend, all right? Sometime we can see the inverted head and shoulder pattern, okay, as a continuation pattern. So instead of a downtrend, we see an uptrend, it probably form an inverted head and shoulder chart pattern, and then a continuation. So support level, end of a downtrend, okay, during a bullish trend, okay, or at midpoint of a bullish trend. So price goes up, A, B, C, D, E. So the A, B, C, D, E, okay, all right, the B to C is formed of an inverted head and shoulder chart pattern, okay? There is another place where we can see the inverted head and shoulder chart pattern is at a price target, okay? So bearish chart pattern, bearish price target, correction, bearish price target. Where the bear are setting their target is a support level, okay? So we are likely to see, when those bears are taking profit, we are likely to see a bullish chart pattern, including the inverted head and shoulder chart pattern, okay? How do we trade the inverted head and shoulder chart pattern? We measure the depth of the inverted head and shoulder chart pattern, and we project it, okay, above the neckline. Another thing I need to mention to you is that when we project it above the neckline, always we must divide the target level at midpoint, because professional, as it goes above the neckline, as I show you here, you retest it here, and we buy. Some professional will take profit, first profit at midpoint. You see here. Let me move it. So price went above the orange line, pull back, okay, invitation to buy. We buy. The ultimate target is the red line, which is the projection of the depth, okay? But as the price going now, professional will take first profit near the midpoint of the target. You see this candle here on the monthly chart? This is midpoint profit. So if you buy here, you can buy again at the midpoint. Or if you miss the boat, so to speak, which means you did not buy near the neckline, watch the reaction near the midpoint of the target. If you pull back, use the top-down trading method to trade it, and you may join it to reach the ultimate target. So you are catching the boat on the way, so to speak, as the price going up. At midpoint, they take profit, pull back. You see this candle here, pull back, almost near the top of here. You see it's a support level. Always buy at the key level. Okay, all right. See, it pull back to the top of this okay, resistance level. Okay, talking about the tail of this candle on the monthly chart. If you go to the daily chart, 4-hour chart, you will be able to enter the trade here, knowing what's happening because the professional are taking profit at midpoint. Sometime for bearish stock, you may see the price may go above the neckline. So price reaches the midpoint, and then the bullish momentum will become so weak, and the trend may not continue to reach the target. The price does not have to reach the ultimate target. Sometimes it will just turn down like this and become completely bearish and come down at the midpoint. So we need to be very, very careful here at midpoint. If the fundamentals are not solid, we may not see, okay, a more bullish progression up to the ultimate target, which is right this level. Here you can see that, okay, this financial instrument is bullish. So after a midpoint profit taking, there were more buyers, and the price reaches the ultimate target and has formed now a double top, okay, chart pattern. How do we trade a double top chart pattern or a triple top chart pattern? Again, once again, here it is. The price is again at the midpoint of the target because look at this one. Okay, you see, this is the measuring stick for this triple top. Below the neckline of the triple top, the ultimate target is somewhere here, okay, near the level of $33. But the price stopped at the midpoint of the target. This is what's happening now at this point in time. Okay, you see here? So do not forget the midpoint of the target for the inverted head and shoulder chart pattern. Okay, I think I've covered everything about the inverted head and shoulder chart pattern. I'll be recording live day trading videos, okay, about how to trade the inverted head and shoulder chart pattern, live demonstration, so you may understand exactly, okay, how to put into use everything we are discussing in this tutorial. Okay, this is the end of this tutorial about how to trade the inverted head and shoulder chart pattern like a pro. I hope you will find it useful and we put into use, okay, to make excellent trading decisions. Okay, we are the TSTW24 traders talking about how to trade the inverted head and shoulder chart pattern like a pro. If you have any question, put in the comment section, and in due course, I will record another video to answer your specific question. Happy trading to you all, and speak to you soon.